Welcome to the Real Estate Jam session. We're going to do something a little bit different today because I'm seeing a panic in the marketplace, not just real estate, but Wall Street and this interest rate hike. We want to talk about how it's affecting everyone. So for that, I've asked George Pino to come in. George is the CEO of Commercial Brokers International in Los Angeles and my business partner. So it was an easy ask. George, thank you for coming on the show today.
Thanks for having me again.
You know, we're seeing a lot of people very nervous about the marketplace right now. I mean, I'm seeing it. Are you seeing it as well?
Absolutely. You know, I've had this conversation probably a half dozen times just in the last week with different clients, with interest rates going on, what's happening, how's that going to affect the investments. Yeah. And really, you know, I thought we could, kind of break it down in real numbers and what it really means and how it's really going to affect them. Because I think a lot of people don't really understand that. You know, I've been in business for over 30 years. So I've seen interest rates at 6, 7, 8, even higher rates. Right. So, really what you have to keep in mind is even today's rates, we're really at some pretty good low rates.
Yeah, I think if as an investor or as an agent, you really have to look at the fundamentals. Mm-hmm. You've got to always be pushing your fundamentals. And if you have that solid base, even when there's a slowdown in the economy, you're going to be fine. You just got to really make sure those fundamentals are in place for you. So, matter of fact, to remove some of the drama from this, the emotions that are out there right now, George put together a chart for us to take a look at. So I really want to have him walk you through how this really affects you. So, George, you ready?
Absolutely.
All right.
So as you can see in this chart, we did two different types of loans. We have a typical loan for a multifamily type property. We're going to start at $1 million loan amount because I think round numbers make it a little bit easier to really conceptualize and figure out. Yeah. So on $1 million loan amount, if you had a 4.75% interest rate that's fully amortizing over a 30-year period, your payment's $5,216 and some change. At a 5% interest rate, your payment is $5,368.22. It's a delta of only $151.75. That's 2.9% of the actual payment, from the original payment. Yep. So going up again to another quarter point interest rate hike, you have a 5.25% interest rate. Your payment goes to $5,522.04. Delta is $153.82, which is a 2.8% differential over the last payment rate hike. So what you have to keep in mind here is, realistically speaking, it's really not going to affect that much of an investment factor. And, let's break that down even. If it's $100,000, it's going to be 10% or 1/10 of this. So it's really only a $15 differential for every $100,000 on that loan. Yeah. $15. Yeah. So, and for every $1,000, it's not even $1. Yeah. So that's what you really want to keep in mind. Now, on a 25-year amortization, a lot of people get confused because the payments are a little bit higher because you're paying it off lower. But realistically, the differential is actually even lower because you are paying it off. So there's less interest that you have to pay. So in $1 million loan amount, on a 25-year amortization, a 4.75% interest rate is only $5,701. So at 5%, it's $5,845, which is a delta of only $144, even less, so 2.5%. Now, 5.25%, $5,992.48 is your payment. Again, change of about $147, which is only, again, 2.5%. Now, what does that mean in real terms as well? So if you were actually looking at and you wanted to maintain the exact same payment, let's say, from each quarter point hike, then realistically speaking, you're only looking at about a 2.8% difference in price. So $972,000 versus $1 million loan, or 2.5% on a 25-year amortization, so $975,000 versus $1 million. So it's really not that big of a difference. And reality, if you keep that in mind and what you're looking at and buying, and not focus so much on the interest rate as opposed to the payments and the price. And I think if you keep those fundamentals in mind, you can't go wrong with your investment.
Yeah, I agree. And I thought this was a good visualization for us, better than I can't even speak it. For you guys to really see what is going on in the marketplace. I mean, we had to slow the economy down. It was on fire. I mean, it's just some of the stuff I've paid, the grocery store. I wanted 2 pieces of fish the other night were normally $8.99. Now they're $12.99.
Yeah.
And, so that has to come to, had to slow that down. So, they're still talking about a couple more rate hikes, but, remove the emotion from the deal, go back to your fundamentals, take a look at it, understand your buying power, where it's at. It has changed a little bit, right?
Mm-hmm.
But it's something that really isn't that drastic at this point. So now, will there be foreclosures, do you think?
I think the foreclosure market, not necessarily, because, with the appreciation that we've had, this allows a lot of the lenders to actually restructure those loans and either refinance them out so that the payments will be lower, even though the interest rates are higher.
Right.
So, they've built out and they've also paid down the loan. That's what you have to remember is that, when they first acquired the property, they may have $1 million loan, but after about 5 years or so, that $1 million loan is only $900,000. So as you can see from the chart that we just had up, your payment would actually be less if they refinanced it out, even at a higher interest rate at a quarter point.
Yeah.
So that's what you have to keep in mind.
I just think if you really get back to your fundamentals, there's still a lot of opportunity out there. So, well, George, thank you for coming in and doing this. I thought it was key for everybody to kind of hear this and see it in on the screen. And so if you folks have any questions, don't hesitate to reach out. You can DM us. And when you're watching this video, make sure you give us a like. And if you haven't done so, make sure you subscribe.